Hello, everyone. This is your teacher, Anne. The main takeaway of this video will be an overview of strategic cost management. Before anything else, please make sure to have your pen and paper with you so you could take down notes as we move along the discussion. Pause the video and resume when ready. Here is a list of things that we will be learning today. First, we will define what is strategic cost management. We will learn why strategic cost management is important. We will familiarize ourselves with the guiding principles of strategic cost management. And in relation to the previous number, we will distinguish strategic cost management from the traditional cost management. So, first, we might ask ourselves, what is strategic cost management? Is it simply a combination of cost accounting and management accounting? Let's examine further. While the term cost management builds on both cost accounting and management accounting and assumes a knowledge of both, cost management is not a combination of the two. First off, cost management is much more than just cost accounting. If you remember, cost accounting is the field of accounting that records, measures, and reports information about how much things cost. But on the other hand, cost management is more comprehensive than cost accounting. Similarly, cost management is not the same as management or managerial accounting. If by management accounting, what we mainly have in mind is break even analysis, economic order quantities, and above all, calculation of variances between actual and standard costs. Cost management is far more concerned with management's use of cost information for decision making. Although cost management is not cost accounting and management accounting, they at least help set cost management in context. So, how do we define strategic cost management then? According to the authors Cooper and Slugmulder, strategic cost management is the application of cost management techniques so that they simultaneously improve the strategic position of a firm and reduce costs. They suggest three sorts of cost management initiative based on whether the impact on the organization's competitive position is positive, negative, or neutral. Let's have an example. A hospital redesigns its patient admission procedure so it becomes more efficient and easier for patients. The hospital will become known for its easy admission procedure, so more people will come to that hospital if the patient has a choice. What do you think is the hospital's competitive position? Positive, negative, or neutral? It's positive. The strategic position of the hospital has been increased over its competitors. Let's have another example. An insurance company decides to reevaluate its accounts payable system to make it more efficient. Again, an insurance company decides to reevaluate its accounts payable system to make it more efficient. What do you think is the insurance company's competitive position? Is it positive, negative, or neutral? The answer will be neutral. Sure, the company may have saved some of its costs, but cost management initiative that has no impact on the organization's competitive position is considered as a neutral. The evaluation has no positive benefits to the insurance company in the external market. The objective of that change is simply to make the organization more profitable. Another example: a large airline company wants to save up on costs and only placed two desks for administering and selling tickets. What do you think is the airline's competitive position? Is it positive, negative, or neutral? Negative. The cost management initiative that will weaken the organization's competitive position, that is what we call a negative impact. This setup induces long lines for the airline customer, which can ultimately result in high dissatisfaction and a bad reputation for the airline. This may reduce the amount of ticket sales when compared with the airline's competitors. So, even though having only two desks available for customers may initially be cost effective, in the long run, however, it harms the company. So, what did we learn here? An organization should never undertake any practices that are predicted to weaken the position of the organization, even if they would result to reduction of costs. Hence, the term strategic cost management has a broad focus. It is not confined to the continuous reduction of costs and controlling of costs, and it is far more concerned with management's use of cost information for decision making. Now, at this point, we should ask ourselves, why do we need to study strategic cost management? Why is it important? The strategic importance of cost management has drastically increased in the recent years due to intense competition. Customers in highly competitive markets expect that each generation of products presents improvements. Like example, every time a new cell phone model is introduced in the market, us consumers are expecting a phone that is better than the existing ones, right? These improvements may include improved quality, improved functionality, or reduced prices. Any of these improvements alone, or any combination of them, urge a firm to manage its costs to stay profitable. In a world of non sustainable competitive advantage, a firm that fails to reduce costs as rapidly as its competitors will find its profit margin squeezed and its existence threatened. So, all firms have to manage costs aggressively in order to survive in today's highly competitive markets. So, in short, the contemporary business environment, all companies need to strive for strategic cost management in order to survive because of intense competition. The theme of strategic cost management is supported by many sub themes, which we call pillars or the pillars. So, the pillars of strategic cost management is shown in the figure presented. Okay, you can see there the pillars, this part. Not sure if you can see my cursor, but you can see here the pillars of strategic cost management. So, first we have the guiding principles of strategic cost management, and then we have the key concepts of strategic cost management, the objects of strategic cost management. We have the analysis fields and activities of strategic cost management. We have the instruments of strategic cost management, and then the key support factors of the suggested framework. What we will cover in this video are only the guiding principles of the strategic cost management, so only the first pillar. The other pillars will be discussed in the next videos. The first critical pillar of strategic cost management framework is the guiding principles that form the foundation to achieve effective cost management. There are several guiding principles that have been identified to assist in improved and effective cost management. Now, to reach the desired objectives of strategic cost management, the following principles should be considered as guides. So, from the term itself, guiding principles. So, we will use this as guides when implementing strategic cost management. So, we have to understand what causes the cost and revenue structure of the business. We must be able to identify the firm's activities and select those that can be used to produce or sustain a competitive advantage. We must be able to understand and reduce interfunctional complexity, increase effectiveness, and continuously improve costs. We must use strategy to manage costs. We must build skills and involve employees in our decisions. Let's now distinguish traditional cost management from strategic cost management. How are these two different? First, As to focus, traditional cost management has been concerned with internal issues, including emphasizing the current cost of production, allocation of the pool of shared resources to various products and services, and summarizing the results. On the other hand, strategic cost management focuses on the external events and relationships. Strategic cost management should not restrict its attention to the cost structure of the firm alone or its own supply chain. Strategic cost management should monitor the firm's cost performance relative to that of other firms, in particular, their competitors. As to perspective, traditional cost management has focused on the notion of value added. When we say value added, that means selling price less the cost of purchase. Or we can say value added is on markup. So the focus of traditional cost management is on the value added, under the mistake impression that this is the only area in which a firm can influence costs. But on the other hand, strategic cost management perspective is based on value chain analysis. This is the more meaningful way to manage costs, improve profits, and explore competitive advantage. As to cost analysis, in traditional cost management, cost analysis is viewed as the process of assessing the financial impact of alternative managerial decisions. But in strategic cost management, cost analysis has a broader context where the cost data is used to develop superior strategies en route to gaining sustainable competitive advantage. As to its cost driver concept, in traditional cost management, cost is a function primarily of only one cost driver, which is output volume. Cost concepts related to output volume permeate the thinking and the writing about cost, such as fixed cost versus variable cost, average cost versus marginal cost, CVP or cost volume profit analysis, break even analysis, flexible budgets, and contribution margin. On the other hand, in strategic cost management, it is acknowledged that cost is caused or driven by factors that are interrelated in complex ways. In other words, strategic cost management focuses on multiple cost drivers' perspectives and not just volume. As to primary concern, traditional cost management's primary concern is more on costs alone, while the primary concern of strategic cost management will not only be cost management, but also increase revenues, improve productivity and customer satisfaction, and at the same time improve the strategic position of the company. As to key disciplines, traditional cost management has always been seen as a part of accounting and finance. On the other hand, strategic cost management should help companies to understand and respond to key tenets of marketing and economics, such as know your customer and know your products or services. Make sure you know what your customers want and that you have the ability and resources to provide that. And lastly, as to primary role. The key role played by accountants in traditional cost management has been scorekeeper. Accountants should become part of their organization's value added team, participate in the formulation and implementation of strategy, translate strategic intent and capabilities into operational and managerial measures, and move away from being scorekeepers of the past and to become the designers of the organization's critical management information systems. As the cost management makes the transition to the 21st century, evidence increasingly shows that it is abandoning such traditional roles and embracing those of a consultant and analyst. So, for traditional cost management, accountants are merely scorekeepers, but for strategic cost management, accountants are embracing the role of a consultant and analyst. Strategic cost management is emerging as the source of information and analysis of insights and opportunities. So, in summary, the primary concerns and objectives of strategic cost management will not only be cost management, but also revenue management. Therefore, strategic cost management as a philosophy of improving cost and revenue, a proactive attitude, and a set of techniques that can enable the company to improve costs, increase revenues, improve productivity and customer satisfaction, and at the same time, improve the strategic position of the company. So, in retrospect, here are the things that we learned today. We learned the definition of strategic cost management, the importance of strategic cost management, the guiding principles of strategic cost management, and the main differences between traditional cost management and traditional cost management. I mean, the main differences between the traditional cost management and the strategic cost management. Okay. So, thank you for listening. I hope you all learned something valuable today. Till our next lesson. Bye.